Welcome everyone to this new edition of the CFO Market Review. As seen on the title of this video, this will be our official first video of the weekly HumpDay Market Recap series. So, if you guys enjoy this type of market review videos with CFO, make sure you guys let me know by commenting down below. Alright, let's begin. So first off, the markets today have clearly given us reasons to not be too trustworthy of this recent bounce. And as I have clearly stated in last night's live, the markets have moved exactly in the way that we have anticipated. So let's go over the S&P 500 or SPY to visualize this. So last night, I talked about the fact that if we do see a gap up due to the overnight earnings that we had, for example, Tesla, which gapped up bigly, we should be seeing pretty much a weak trending day. And so that's exactly what we got as we filled in the gap up today. And then we decided to move lower and retest the daily 10 SMA or my red line. And I also mentioned this in last night's live as well, that if we do retest the daily 10 SMA, we need to see whether or not we will be seeing a close over the daily 10 SMA, which will officially tell us that the price is looking to use this SMA as a new area of SMA support. And so that's exactly what we did. We closed over the daily 10 SMA. However, I also mentioned, little asterisk there basically, that we will be seeing a lot of important earnings reports coming out this week, and that can completely derail my plans for the market in the foreseeable future. And so today, after hours, Meta earnings completely obliterated today's bounce, this late day bounce, and close over the daily 10 SMA. So I believe after hours, the S&P 500 is down below this $503 support level. And guess what? In the private CFO Discord, in the CFO Pro Traders channel, I signaled this for my members. Okay, so at 10:27 a.m., I said SPY, swing trade, or hedge 503 strike puts that expire on April 30th at $2.45 per contract. And so based on the after hours price action on SPY, these contracts should be opening nearly at the money or in the money tomorrow. And so if we continue to break lower on this gap down early in the morning, we should be seeing a potential break below 502, and eventually we will hit this 498.50 level of support once more. Now, second off, we need to talk about how the bond yields and the dollar have both been moving higher and staying at highs the entire time the market was bouncing the last 2 days. So here is TNX, or the 10-year yield, which has clearly bogged down bond prices like TLT and IEI. And so the bond yields have continuously stayed at highs and continuously bounced at this daily 10 SMA as it made a textbook higher high and higher low uptrend. And basically the inability of bond prices to recapture any type of bids from buyers and to pivot away from current lows clearly tells you the risks that are currently increasing in the equity markets. Now, we do have the FOMC meeting coming up on April 30th through May 1st with the interest rate decision and the Jerome Powell news conference on May 1st. And based on how the bond markets have been moving, we are clearly seeing some fears that this high interest rate environment will be sustained for much longer than anticipated. I mean, just on the weekly time frame for TNX, we're basically back to the highs and lows that we saw last year in October. So if you guys remember, I predicted that the Federal Reserve will most likely be cutting interest rates right before or during Q3 of this year. I stated all of this throughout July and August of last year. And this is important to note because the Feds seem to be backtracking what they have stated from their initial last two FOMC meetings, which was that they were looking forward to at least 3 interest rate cuts. But according to Wall Street analysts, the Feds may have expunged those initial plans for this year, which put the nail in the coffin for the equity markets as they began to waterfall lower in our official first pullback of this year. So bonds like TLT have suffered on the backdrop of this developing story and consistent rise in bond yields for most of this current year. Now, of course, there are two sides to this developing story, as one side is still looking for 2 to 3 interest rate cuts, remaining optimistic, while the other side is clearly looking for the first official rate cut in the fiscal year of 2025, remaining pessimistic. But let's be a little bit realistic here instead of going from one end to the other end. Because based on the CME Fed Watch tool from the CME group that we have been personally using to catch any type of probabilities that we will be getting our first rate cut this year, we should be heading towards our first rate cut in the September FOMC meeting. And during that September month, the probabilities of an interest rate cut currently continues to slowly rise as seen in the CME Fed Watch tool. And you guys can just simply Google this tool and look at the probabilities for every single FOMC meeting that we have currently. So we will keep a cool head and not worry about the two different polarized sides and focus on the more realistic and nuanced side of this interest rate cut story. Just remember that the Feds are very much worried about keeping a too high interest rate environment for too long, as they do not want to crush any type of economic growth. But is it too late? Well, this is a great segue to transition into the biotech sector, as I am looking to short the overall markets again, especially the small caps. But first, let's talk about XBI. So this ETF has been battered to the ground since March and erasing all the gains that were made this year. Now, the biotech sector has not been able to recover at all since the rate cut fears kicked in, basically. Now, this sector in particular is extremely sensitive to such rate cut fears because, number one, we have simply seen constant outflows in this sector as seen by the sell-off. And number two, the negative interest rate sentiment has caused this sector to confirm that it's still hurting from the current high interest rate environment since 2022. And if you look all the way back to 2022's price action, you can clearly observe that the current price, has not progressed at all since 2022. So if you go all the way back to January of 2022, we are currently underneath January's price action. Now, you guys need to really remember this. Biotech companies have a huge cost of operation as they basically burn cash for R&D, aka research and development. And in fact, this burning of cash for R&D has doubled leading into 2022 and is about to triple in the next few years. So with the higher interest rates, biotech companies are increasing the amount of money they borrow, which in turn have higher interest rates, thus the higher cost of capital to simply operate their business. So remember that these companies are infamous for debt financing, and they take on debt when interest rates are low. But with the higher interest rate environment, it's harder to take on high interest rate debt when these companies need it for survival at a time when investor backing or funding is decreasing as well. Hence this huge drop since the pop or the initial pop in late February. So in 2023, 41 biotech companies declared bankruptcy, which was an all-time high number. Now, the reason I am telling you all of this is that this will affect the overall market breadth as small and mid-cap biotech stocks continue to be beaten down. And this is why I am looking to short the Russell 2000 or IWM. Now, I've shown the analysis on IWM way too many times. So to put it simply, if we break below this ascending support trend line that makes up that large macro bull flag that can be visible on the weekly time frame, okay, we will officially go short and most likely go short into early Q3 of this year. Now, I will be putting that short trade in the private CFO Discord by the end of this week if the alerts are triggered. All right, so that is it for this recap video. If you liked what you heard, please leave a thumbs up down below and hit that subscribe button. And if you're new here and want to join the CFO SwingtradingWatch newsletter and the private CFO Discord, you can get 50% off for your first 30 days. You can gain access to the current swing trades that we have right now and much more. So make sure you guys DM me on Instagram at ChartsFocus1. Again, my Instagram handle is at ChartsFocus1. Also, make sure you guys check out the other videos on this channel to continue your learning in trading. Thank you so much for watching, and I'll see you guys next Wednesday.